Good morning from Chicago traders. It is 8:01 a.m. Chicago time on Thursday, the 18th of February, 2021. This is episode number 1940. Thanks for joining me this morning. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Let's jump right into it, into the conversion trading P-market summary sheet. This morning, we see clear risk off sentiment. The trend is down overnight, multi-distribution profile. The NASDAQ is the laggard today, down 146.75 points or 1.07%. The Russell follows, down 18 points or 0.81%. The S&P is off 26.75 points from yesterday's settlement, trading at 39.01. The Dow's 174 down. The leader today is the cable. The cable's approaching $1.40 or 0.82% higher. Gold is seeing a small pop, up $10, trading at 1782.80 or 0.56%. Crude, of course, continues to be on a tear, trading above 60 at 61.40. One thing you need to know about crude is that it rolled to April today. The front crude contract is now CLJ1 or CLJ21, depending on your platform. The notes, interestingly, are down a tick and a half, and the bonds are down as well, 11 to 12 ticks. So we're seeing kind of a little bit of a liquidation type of market across the board. The Bund is down as well. The key elements today, really not very much. Walmart rides soaring holiday demand to beat some same-store sales estimates. Hedge funds, Robinhood, and a couple of characters from Wall Street Bets are going to be in front of Congress today to testify on the whole GameStop bonanza, and that's where we stand. The rest of it, you can, the calendar you can look up. There's nothing major here today. A lot came through at 7:30 Central, 8:30 Eastern. And currently the S&P's traded 279,000 contracts in a downtrend. The range keeps expanding. It's actually higher than 37.25 points now. The S&P has fallen below 3,900 again and is struggling to maintain higher prices, although it closed near highs yesterday and took out the overnight high to test last week's high before failing over. So that's where we stand today. Let's take a look at what we expected yesterday versus what we got. The primary scenario yesterday is a push to 20. If you recall, 20 being key here. A push to 20, roll over to 09, consolidate 09, push through 3,900. Was looking for it to test the 97, the next stock zone down before the pop higher. The secondary is an immediate push lower, consolidate ahead of the century figure, push to 97, and come all the way back. The difference is one pushes higher for a setup short, and one is a push immediately down. Looking for a breakout type trade or a pullback to a consolidation area. Here's what happened yesterday. We open up. It's an open auction out of range. We could see that it's a relatively tight open. It tests down early on into that 38.96. It kind of pushes there immediately, almost like a scenario 2 type thing where it just does not respond back. We never bother to balance that inventory or become responsive. It goes to 96.50. Remember, 97 is the area we're looking for. And then it pushes to the 20 by 3 ticks. We get to 20.75. And then the 20.75 is tested again. This is, again, as I indicated, this 20 is a key area above, and that's the resistance I was looking for scenario 1. So we got scenario 2 down into 97 and back. That's scenario 2. However, in play still is scenario 1, which is a push into the 20, rotate over back through the 3900, and then test this 97 area. So yesterday we got 1, or I should say 2 plus 1, both scenarios. The key thing to remember is not how it does it. The key thing to remember is the areas we expect the market to respond, and those areas were 2009 down here and 97 with a double O, always creating a bit of a hassle. Those are the key areas that we were looking at yesterday. Those areas traded pretty well. We had a multi-distribution profile. We ended up having an odd close in that we shifted the point of control to this very sharp high volume node near the highs, leaving us with a bit of a weak high. So we expect the overnight session to push higher, which it did. The overnight session ended up pushing to 36 above 30. So we ended up squeezing just a point above last week's high at 35, and then we fell back through in the overnight session. But the very nondescript profile, and what we notice is active price discovery throughout the range yesterday. So both sides were pretty active. So then we look at the delta and which side the aggressor is supporting, and what we see yesterday is that the aggressor is on both sides as well. We see this trading negative, positive, negative, positive with price. So why isn't my zero line going all the way through? That's kind of interesting. There we go. I didn't change that. So we see it kind of snaking around the zero line, the orange broken line, the dashed line there. So overall, yesterday was an attempt to push lower, but the overall context is it did not find continuous sellers yesterday. It ended up actually closing above the open, so we had a positive candle, and what we ended up doing is we ended up pushing from the 3909, which is about where we opened, squeezing down into the 97, and then finishing at the same close as Tuesday. Tuesday's close was 25.5, I believe, 25.5, and yesterday's close was 26, and this is similar to what we saw here, where it's testing below and then finishes stronger. And currently, we are, we initiated one-time framing down on the daily. We have a lower high, and we are about to breach the low of yesterday. But I am suspicious. As to the quality of the close here, and how likely it is that the S&P will hold these prices lower. So today I want to be on the short side simply because the structure is set up this way, but I'm going to tell you that I'm going to be very, very cautious and very lean in terms of risk, in that my expectation is we would see more of the same, testing below 3,900 and finishing somewhere above into the 3,909 area. I'm just not seeing this product staying below the 3,900 very well. So that's where we stand. Yesterday we formed a lower high, lower low. We dug into the prior point of control of 3909, and we tested below. We came back up. We finished higher. Yesterday's close is quite bullish. But the overnight session looked promising in that this was just a pullback to test 3,900, 3,909, and it's likely to consolidate up into the 20s, the 26 being the close, and then to start squeezing again that high into 3950 and 3959, 57, 59 area. And it's looking like it is not able to do that. Here's the overnight session. Looking at the overnight session, almost 300,000 contracts traded, so we have a fair amount of activity here, and we have a fair amount of range, so we expect the open to be relatively active. The overnight inventory, let's check that real quick. Just going to open up that chart. Overnight inventory at 71.5 negative on the sell side, not too incredibly big, but overall this is really trending down. If you look at this profile, super thin, super slim profile. It's just price discovery down. So this is an auction that is gyrating, consolidating, gyrating, consolidating, gyrating, consolidating, and unless it puts in an excess low, comes back, tests, and then pushes through a consolidation above to the upside, for a long, we see that overall the market has not successfully found buyers, and if it has not successfully found buyers, then it's likely to continue to seek prices lower. So on the open today, the expectation is a minor pullback and then continuation lower to go with what it's already done. Okay, so that's what we have in the overnight session. There's really a couple of flagging areas here, but overall, it's really failing to hold higher prices. We're below the overnight point of control. We are below VWAP in mid. We're below yesterday's VWAP mid in the day session, and this looks like just a pretty solid liquidation at this point. Okay, so let's take a look at what's expected for today. Setting up this chart. So what are we looking at in terms of areas to test? Here we go. One thing I want to double check on the daily. Yeah, so the next key areas are 88, 88, 78, 62, and 30. 62, 45, and 30. Okay, here we go. This morning, trend down, not seeing buyers stepping in yet. Given the inventory, I'm expecting an early squeeze higher. I expect it to fail. I'm not looking for it to push through the 3,900 by much. I'm looking for it to take out the overnight low and start working its way through to the 88 area right here. 88. And then pushing through and testing the testing what's below. We have a high volume node at 80 from a while back. You could see a blip of it here on the composite. And then I'm looking for it to get below the 1 vol sigma, push into this 62 if we do get range, and then I'm looking for a strong pop into the close. All sell-offs are being bought. So 88, 80, a potential push all the way down to 62. We do have 78 here, 78. Hard to say today, but I'm expecting it to continue lower. The theme, don't get lost in what I'm putting on the screen here. The theme today is that it is very likely to continue lower. It's, the way the overnight session is set up, the fact that we're not finding those buyers, the expectation is it's going to continue lower and seek those buyers by advertising price lower. This is why the market keeps moving lower. It'll continue to move lower until it finds those buyers. Open auction on the secondary, a test of the overnight low for the overnight stat, potential test of 88. Then we're looking for an impulse higher to bring us back into the range, consolidate at the first high volume node of yesterday, which was around 3909, and then squeeze up into the 39.20. I expect the 39.20 to put a stop to the buying as it did yesterday, and then look for it to come back and consolidate here at the 39.09 on scenario 2. Hard to say what it's going to do today. We are looking at a pretty solid channel down, no buying whatsoever, price discovery, multi-distribution profile. I have to go with scenario 1 being the selling, with a minor correction potentially at the open to balance inventory, and then the extended target will be the high from January at 62, but it's got some obstacles in front of it: 88, 80, 78, 62, and then 38.50 being the next key area down, which I don't expect today. So that's what we're looking for today. So the question is, what's the quality of the lifting at the open? What's the quality of the buying? Think of yourself going into like a cattle auction or something like that. You don't just pick up your paddle and place your bid as soon as the steer comes into the ring, right? You're going to wait to see who's bidding, who's selling. You have an idea of what inventory is there. Auctions are not two-way because you can't turn into a seller all of a sudden, but think of the same idea. The market is going to want to establish what it wants to do and let it do that. It may take 15, 20 minutes on the open. Let it do that before it shows you what it wants to do. Don't jump in head first and get yourself in trouble, or commit to one side and defend that side for the rest of the session. A lot of traders do that. Good luck. I'll catch you tomorrow morning. Take care.